Let's get into your markets now. Technology firms fell in Asia this morning, tracking a deep sell-off in New York, where Apple was hammered by worries about demand for its iPhones, while energy firms also fell with oil prices. After last week's US elections inspired mini-rally, global equities resumed their month-long slide as investors fret over a number of issues, from the China-US trade war and Brexit to rising US interest rates and slowing economic growth. The latest retreat comes after a key parts supplier said a client, widely taken to be Apple, had slashed orders, stoking speculation that the US titan's popular handset was not selling as well as in the past. The tech stock tumbles, with the Tokyo's Nikkei collapsing a whopping 2.1% to end at 21,810 points. The Hang Seng managed to tick 0.6% higher at the close to end at 25,792. The Shanghai Composite gaining almost 1% to ring the bell at 2,654 points. Wall Street's major indices tumbled last night as shares of Apple and Goldman Sachs dragged down the technology and financial sectors. With Monday's losses, all three indices erased their gains from their brief rally after US congressional elections on November the 6th. The Dow Jones Industrial fell 2.3% to 25,387 points. The S&P 500 lost almost 2% to 2,726 points, while the Nasdaq Composite was the biggest faller, losing 2.8% to close at 7,200 points. Let's take more look at your markets. We cross over to Arabile Gumede at the Johannesburg Stock Exchange. Good afternoon, Arabile. Over to you.
Yeah, good afternoon, Nzinga. Well, the tech stock tumble does continue indeed. You're seeing it across China there in those stock markets as well, as you noted. Also out in the United States, of course, Apple suffering quite heavily on that front. That has been brought home, of course, the likes of Naspers as well, certainly struggling of late and seeing the market go down as well quite a bit, around 2% as well yesterday. The market is set to be negative as well today, around 0.2% lower if you take a look at how things are faring right now. But the European market as well seems to be favouring that similar sentiment. Let's unpack that now and we'll get into the details in just a bit. Martin Harris from IG South Africa joining me now as we unpack the markets perhaps a little bit more. Martin, thank you so much for joining us. Slight tinge of negativity today in the market, but the tech stock tumble seems to be the main concern here across all global markets, really.
That's right. Thank you, Arabile. So we've seen now in the United States that we had a bit of a tech stock tumble. Yesterday, Apple down as much as 5%. That coming on the back of their suppliers in Asia announcing that they've got subdued demand for the latest iPhone products. So what we're seeing is Apple cooling off there due to that, and along with other IT businesses in the States and tech businesses. Asia also feeling it today. Tencent positive this morning, but we are expecting their results out on Wednesday, and they're expected to be lower. Their revenue is still expected around 14%, but that's significantly lower than what we've seen from Tencent, and that's really due to restrictions now on gaming in China. Those restrictions are designed they're trying to combat gaming addiction in China, and so they've restricted any new gaming title releases from Tencent to the market.
Yeah, that's certainly going to hurt them quite a bit. Would you say that the tech stocks maybe ran too hard, though, and that now perhaps they're being curbed and perhaps brought down to life, so to speak?
Absolutely. I think a lot of investors are taking money off of the table on those tech stocks. They drove the market for the last year, and if you look at all of the outperforming stocks, at least up until a month ago, the FANG stocks were there, and you had Tesla sort of coming in and out depending on what Elon Musk was doing.
Yeah. If we bring it back a little bit locally, in terms of earnings news, yes, we had Vodacom out yesterday. They have said and noted that growth is going to be hard to come by for the coming time. But Telkom also coming out with their earnings. Decent in the circumstances of South Africa's economy, surely.
No, definitely a respectable set of results considering the economic environment. So taking a look at the macro environment of South Africa, their headline earnings per share are down 3.3%. That is really because they've been adjusted for voluntary retirement.
Yeah.
So there's a payment that Telkom are making, but if you take that out, you adjust the headline earnings per share, it comes in that they're positive 10.3%. Their mobile data or the mobile services revenue is up 53%. They've managed to actually increase their customer base by 50%. They've now got 6.5 million mobile services customers. And so that's really from their aggressive strategy at attracting new customers, offering great deals on mobile data. The difficulty there is that if you giving the really good deals on mobile data, normally your margins have been squeezed. So they're making less money per gig than any of the other providers.
Sure.
But they have done well at attracting new customers. And so we saw that Vodacom went down yesterday.
Yeah.
And so the likes of Telkom are eating into their pie. The other issue with Telkom, though, is so that whilst they're increasing on the mobile data side, or the mobile services side rather, they are losing a little bit on the business side. So the big issue there is that public expenditure, so government expenditure, has been completely subdued. And so they're not... there's no development of public services IT infrastructure, so they're not getting much business from the government side of the business, and they're really just getting it from individuals like you and I.
Sure. Very difficult to form a plot for them to sort of move forward. But as you said, respectable despite the circumstances. Yes. As Vodacom went down yesterday, so too are Telkom down just over 2% today as well. So a bit of a struggle on that front. I wanted to chat about the oil price just a little bit as well. Firmly below $70 a barrel again now. So it's 69 odd a barrel. It seems that no matter what happens with this oil price, no matter which direction Saudi Arabia says they're going to go, this oil price is purely determined by whatever Donald Trump says more than anything else. Is that the case, and why?
So, I mean, this is now the 12th consecutive down day for oil. Donald Trump did come out and say that he thinks of oil prices or high oil prices like a tax, and he hates taxes. And so his restrictions or sanctions that he was going to place on oil-producing countries, he was looking to alleviate them if the oil price got any higher, because he didn't want to be responsible for this high oil price. So there's a bit of to and fro coming from between OPEC and Donald Trump. We'd like to see what he has up his sleeve. OPEC are still looking to restrict Brent crude supplies, but at the same time we've got very high US shale and US oil supplies. So there's an oversupply of oil in the United States. They cannot export that oil, though. So the oil price in the United States is actually significantly lower than the rest of the world right now, because they've got an oversupply.
Yeah.
We'll have to see what OPEC are looking to do. They are very happy with this current price. The higher the oil price, the more producers they bring online as well. US shale producers are expected to be profitable above $28 a barrel. And so when we're at $68, $70 a barrel, they're making a lot of money. So the more producers online, the more supply, the lower the price comes.
Sure. Quite an interesting one there. It'll certainly help us as well as we try to get petrol prices a little bit lower. Very finally, the rand a touch weaker, 14.45. I mean, having seen it go even below that 14 rand mark, this is still bad.
Look, that below 14 rand mark was very temporary. What we're seeing right now is a liquidity squeeze in the US dollar. There's a large demand for dollars globally, particularly with the euro now below, it's at its worst level for 2018. So there's a bit of a rush towards the dollar. That rush towards the dollar then has a knock-on effect across all the currencies. And so in the short term, what we are going to see is a weaker rand because of the stronger dollar. And we'll probably see that through to December.
Martin, appreciate your time, bud. It's going to be an interesting one to cap off the rest of the day. We'll check in on it perhaps a little bit later on. Pretty much flat with a slightly negative bias for the FTSE, for the JSE rather, the oil share, around 0.1% they're down today. The rand, as you saw, 14 rand and 45 cents. The oil price below $70 a barrel. That's where the buck stops this afternoon. We'll catch up with Nompumelelo right after this.